Freedom of time is my ultimate goal, and because of that, I highly value both productivity and efficiency. That's also the reason I use Spotify for podcasters. You see, they make it insanely easy to record, produce, edit, distribute, and do anything else I need to for my podcast right from my desktop or even from my phone if I'm on the road. I also love that they've allowed you guys, the listeners, to interact with me through polls or sharing your thoughts and experiences on the topics that we discuss. Best of all, despite them offering all these cool services, it's 100% free, and you know what? They even pay me for simply telling you about it. If you have something to share, you want to start creating supplemental income while doing limited work, and you want to buy yourself some freedom of time as well, start now at www.spotify.com/podcasters or download the Spotify for Podcasters app. Trust me, you'll love it. In today's episode, I'm going to share my opinion on one of the age-long questions in trading, which is, are the markets random? We're also going to talk about how reps equal checks. If you guys are new, welcome to the Trading Coach Podcast. My name is Akil Stokes. I'm a Forex trader. I'm also a trading coach over at Tier1Trading.com. Thank you for joining the show. If you love what you hear, do me a favor, support by leaving me a rating, a review, hitting that like button, and of course, sharing this with your community. Also, if you're doing it on social media, share it with me as well. I love sharing that you guys share that you love episodes. That way we can spread the word. That way we can get more listeners, more topics, and I can come up with more awesome episodes. So speaking of episodes, let's hop into this one. Hope you enjoy. Again, even if you can't trade these opportunities, it's good going through them, training your eyes to see them, because I'll tell you what, all of these will happen again. Right? All of these will happen again at some point. So the more reps you can get, the better. I was watching some college football this weekend, and there was a team that had a massive upset, a team called Colorado who won a single game last year, and they were playing a team that was in the national championship last year, and they were supposed to lose by like 20 points, and they ended up winning. And one of the main plays in the game was basically Colorado got an interception right at the goal line. So TCU, the other team, they were going to score. They were going to get 7 points. It was a play that unfolded perfectly. Like, even I'm shouting at my screen. I'm like, oh, the flat's open. Touchdown. And then all of a sudden, the quarterback throws it, does everything he was supposed to do, and then a guy in a white jersey from Colorado jumps out of nowhere and intercepts it. And it's like, how did he get there? How did he know that? And they looked at the film review later, because I'm nerdy about that stuff. I love film review of sports. And basically, the reason he got that interception is because based on what he saw and the tendencies that you predict on the field, this is the same thing we do in the market, right? Nothing is a certainty in the market. Nothing is ever a certainty in the market. But there are tendencies, and when those tendencies happen, they shift the odds into your favor. And what you want to do is you want to historically go with the opportunities that have the odds in your favor, right? There's never a sure win. There's never a sure completed pass, or whatever you want to say it. You're just playing the odds. You're playing the number game, right? That's all we're doing. And he noticed that when they line up in this formation, when these two receivers do this third receiver is likely to do that. He knew that. His teammates knew it. They made the proper adjustments. He played the odds, and he was right. Now, they could have easily tricked him, and he could have been wrong. But he played the odds, and it happened to be right, and it paid off in a big way. But the reason that he was able to do that, and I take this from my own personal experience in playing football, is repetitions, repetitions, repetitions. The amount of film that we look at in sports is crazy, right? And I can only imagine on the coaching side of it. But as an athlete, we're watching hours and hours and hours and hours and hours of film looking for the absolute smallest edge. And I'm talking to the point where, again, talking about NFL, American football, the point where there was a lineman years ago that used to look at the color of another lineman's knuckles. And the color of his knuckles would change based on how hard he was pushing into the ground. And how hard he was pushing into the ground told him if he was going to do like a bull rush, which is like charge at you as fast as possible, or try to do like a specialty move. Right? As a receiver, I had to tell once that someone picked out that if I knew the ball was coming my way, when I got out the huddle, I would spit on my hands, right? Or on my gloves, right? Now you spit on your gloves, it makes it more sticky. So I wouldn't do that if I wasn't getting the ball, because in my head I'm like, I'm not getting the ball, who cares? And that was a tell where he said, hey, defenses know you're getting the ball if you spit on your hands, right? It's these very small tendencies. And we watch film over and over and over again for the absolute smallest, the tiniest clue, in hopes of that when the game comes, we have a chance to exploit it maybe one time. Maybe just one time. And we go back to a conversation I had on the market about randomness. Is the market random? And that's a question I put on Twitter the other day. It's still up there. Let me just see what the poll says real quick. I think I put up, if I remember correctly, I said, are markets random, right? Nice and open. I said that there's three categories you can choose. I'd love to hear what you guys think. 1 was all the time. 2 was mostly. 3 was not at all. What do you think had the highest vote? Are the markets random? 1, all of the time. 2, mostly, but not all the time. Maybe I could have put some time. Or 3, not at all. And so far, Greg says, number 1, all of the time. So far, right, there's still 5 days left in the poll because I put them up for 7 days. So far, 10%, just rounding here, so it's not going to equal 100, but 10% said all of the time. 38% said most of the time. 51% said not at all. And I got a follow-up question for that, asking, I'm interested to know the real answer, Akil. And I'm interested to know the real answer too, right? And I don't think this is one of those things where there is a real answer, because it all depends on what layer you want to uncover, right? This is a whole layered cake of randomness, right? So is price action in the market random? Well, no, technically it's not random, because price action is based off what? Buyers and sellers, right? And people buy and people sell with reason, whether it's good reason or bad reason. Most traders, right, don't just kind of close their eyes and pick an asset and put random amounts of money in it. Most traders, I'm sure there are some, God bless them. But most traders are trading for a reason. Now, whether the reason is legit or not, whether it's a good reason or a bad reason, that doesn't matter in our question of randomness. If you have a reason, it's not random, it's purposeful. So in general, the markets are not random, right? The markets are purposeful because they are nothing more than the buying and selling action. So on that level, no, I don't believe the markets are random at all. But the next level, if you want to be more specific and ask, well, what about what we see on a chart? Like, are price action patterns random? And not just in their formation, because we know that price forms for a reason, but like, are these patterns that we give so much credit to, whether it's haramis or double tops and double bottoms or flags and blah, 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 whatever, they're all the funny ones out there. Are their outcomes random? And that's a much deeper question. And for that, I would shift from not at all to mostly. I'm a firm believer that most of what you see on the chart is random as far as looking at quote unquote patterns with expected outcomes, if that makes sense, right? This falls back into the whole thing I say about when we trade. Do we trade the what or the where? With most things, it's a combination of the both, right? And I learned the hard way. If I trade every AB equals CD pattern, if I trade every double top and double bottom, I notice from personal experience, I will lose money. How do I know? Because I did it, thinking it would be simply that, but it was completely random. So our job as traders is this: study the film, the price chart, that thing in front of you with the squiggly wigglies, with the candlesticks, right? That is our film. And we have so much tape on the market. We have so much film on the market. But our job is to study the film. Look for tendencies in the market. Look for things that occur repeatedly. Akil spitting on his gloves before getting the ball, right? And see if there's randomness in the outcome or if it leans a certain way. So if you're studying bullish flag patterns, just for an example, you're studying them, and you notice that, hey, most of the time I get a bullish flag pattern and the lows are doing this while the highs are doing this and the flag pulls in this direction. And it does it for a certain amount of days. The tendency is that price does this. Or when price action gets to a previous level of structure resistance and it puts in this type of pin bar candle followed by a higher high, higher close, the tendency that I've noticed over watching on this film is that it does this. Those are small bits that shift the edge from random, let's just say 50-50, to a little bit in our favor, whatever that percentage may be. And our job is to study that tape, identify those things, and during the small amount of times that they actually occur in the market, right? We talked about frequency earlier. During the small amount of time that they actually occur in the market, we put ourselves in position to take advantage of it. Just like that cornerback. The other team lined up. He saw something. Oh, crap. His teammates saw something. Hey, Viking, 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 whatever code word they want to use. And they went for it. And they could have easily been tricked. The ball could have went to the other side of the field. The other quarterback could have noticed it and threw it away. He could have dropped the interception. It doesn't matter. The point is, he put himself in the probable position. And this time he got the payoff. As traders, we're doing the same thing. We are looking for tendencies. We're yelling, Viking, Viking, Viking at our computer. And then we're putting ourselves in position to take advantage of that opportunity. With the full understanding that sometimes, like, it's not going to work every time. This is the hard part, I think, for most. The full understanding that I may bite on this pattern, on this pass, and I may pay the price. I also understand that I may bite on this pass, and I may be rewarded. And another part of trading isn't just staring at stuff on the charts, it's measuring risk reward. Well, if I jump this route and I get an interception, I'm probably going to win the game for my team. I may even run it all the way back and get a touchdown myself. That's a 14-point turnaround or a 12-point turnaround. If I miss it, they're probably going to score, but they were probably going to score anyway. Because if I don't jump it, that guy's going to be wide open. So is the risk worth the reward? And those are the questions that we need to ask. So we're trying to consistently put ourselves, we're trying to identify patterns in the market that have tendencies, non-random patterns, the very few non-random patterns that have tendencies in the market. We need to make sure that we have a way to be involved and exploit those tendencies in the market. And we need to measure our risk to make sure it's worth taking the chance to exploit them. And that's what we come into the markets and do on a consistent basis every single day. And like we spoke about earlier, a lot of it is waiting. Waiting. Not getting sucked into all the other stuff. Not jumping and showing our hand while all the randomness happens. But waiting for that one thing that isn't random and pouncing like a hungry lion. So that wasn't a very intimidating lion, was it? As always, I'd love to hear your guys' opinions. I know I asked before, do you think the markets are random? I did that all over social media, but I ask you again, now that you have kind of my take on it, Do you agree? Do you disagree? What do you think? If you're listening to this on YouTube, leave it in the comment section below. If you're listening to this on Spotify, there's a Q&A section where you can kind of enter what you think, and I'll publish it. That way other people can see. And if you're listening to this, say, on Apple or Google or somewhere else, just shoot me a private message, a DM on Twitter, Instagram, wherever you can find me at Akil Stokes RTM. Hope you guys enjoyed the episode. Glad you guys are enjoying the podcast. And until next time, plan your trade, trade your plan. Take care.